Welcome to Funding and Disrupting, the most in-depth business podcast for companies looking to raise money and the investors who fund them. Every episode, we interview a funded founder, plus the investor who funded them, to get the real story of how it all came together. If you're searching for funding for a disruptive technology or business, or you're searching for the best companies to invest in, then you've come to the right place. This episode of Funding and Disrupting is brought to you by Aura Collective, a leading tech PR and marketing firm. Let's get funding and disrupting.
Hello, everyone. I'm your host, Keith Herman, and welcome to today's episode of Funding and Disrupting. Today, my special guest is Marcus Brauchli, the managing partner and co-founder of North Base Media. North Base Media is a specialized firm that has pioneered global digital media investing over the last decade, successfully building top brands in many of the world's fastest growing markets. Prior to founding North Base Media, Marcus was the top editor of both the Wall Street Journal and the Washington Post, encompassing almost 30 years. He has also been an operating executive and advised media and technology companies in the US, Asia, and Europe. Welcome to the show, Marcus. How are you today?
Thanks, Keith. It's great to be here. I'm well. How are you?
I'm doing well. I'm excited to talk to you today. You've got a really interesting background that I find interesting, and the audience will learn very quickly why. You studied political science and government at Columbia University, and eventually went on to become an editor at the Wall Street Journal and the Washington Post for almost a combined period of 30 years. Certainly not what one thinks of when it comes to venture capital. What do you consider yourself first, a journalist or a venture capitalist?
I don't know. I consider myself, I certainly still consider myself a journalist, but I also think that, how I spend my time now is in venture capital. There's a huge amount of common DNA between journalism and venture capital. There's a reason that there have been a bunch of successful journalists in venture capital, including Mike Moritz at Sequoia, which is, journalism is a profession of dilettantes who can go deep fast. And I think venture capital benefits from the same sort of behavior. You have to have a wide-ranging set of interests, but you also have to be able to very quickly go deep on something, figure out what's true and what's not true, understand where things are going, and sort of set things into context. In journalism, you set things into context in your words or how you describe things. And in venture capital, you're making decisions about how much money you're going to allocate, what you think the prospects are for a company. So, there's a lot in common between the two fields. And there's obviously significant differences. I think, I'm sure I haven't learned every lesson that I have yet to learn in venture capital, but I've learned a lot of lessons in the last 7 years, not all of them happy ones, about how venture capital works and how to think about valuing companies, understanding enterprises and market opportunities. It happens that I had the benefit of working at the Wall Street Journal. I was a reporter for actually most of my 24 years there. I was a reporter. I was a correspondent in Asia for 15 years. And I think, covering finance and economics and business, as well as covering politics and even occasionally wars, gives you a lot of perspective about how things work, how to ask questions. But doing venture capital forces you to actually know some of the answers and not just ask the questions.
Interesting that your perception of this. My thought when I was reading about your background is that now that I understand, that really makes sense. It's really about fact finding, right? Getting down to the bottom of what's going on. And it takes a lot of research and time to vet things out. And that makes a lot of sense, which I didn't really think of. I was really thinking more about skill set. And when I think of venture capital, because I've always been on the financial side, is more about going through spreadsheets and numbers and that type of thing. So it's interesting how you describe that. What about the numbers side of things? Do you find that to be, were you always inclined, were you good at math and science and, as a child? Is that something that comes naturally to you, or is that something that you've learned? Is that a skill set that you feel that you're strong in, or it's not as important in the deals that you're doing or how you're doing deals?
Well, it's always important. We're an early stage investor. And I think the fact that we're an early stage investor, again, it kind of aligns well with journalism because, when you're an early stage investor, a big part of what a company is telling you is the narrative of where they think they're going to go. And it's not so important to be sitting there plowing through spreadsheets because the spreadsheets don't have a lot of information on them because the companies are relatively new companies. So I would say, when it comes to companies that become larger and there's a lot of financial data and we have to spend significant time with them, on projections and business modeling, I rely heavily on my partners, one of whom has been my co-founder of North Base Media, Sasha Vucinic, who was, he created the first impact fund in Europe. He got a finance degree at the general managers program at Harvard. He's very focused on financials, and I benefit by having him there because he's deeply smart and strategic, but he also really understands the numbers behind things.
So tell us more specifically about North Base, what it is exactly that you're doing and what's of interest, typical check size and your due diligence, what, time frame. Do you have like a due diligence period and then you need a certain amount of time to close? What does that look like? So what are you focused on really investing? What's like the range of check size? And then what is it like in terms of getting things closed from when you start until you end?
So on the first subject, which is what do we invest in? We have a fairly unique thesis. We started in 2014. I had lived in China for a long time in the 1990s. And when I left China at the end of 1999, there wasn't, media consumption was not widespread. The primary form of media consumption, I used to joke, was the pirated DVD. And they did have newspapers, but nobody was going to sit around and read a Communist Party controlled newspaper like the People's Daily unless they were a party bureaucrat. And they had, magazines that were kind of thin, and they had television, mostly state controlled, and radio, but it wasn't really a robust media market. And the government then conducted what had to be one of the great control experiments in history. They said, well, let's see what happens when we give people 600 million people smartphones. And suddenly you had, even though it was behind a firewall to protect the Chinese people from outside influences, you had 600 million people who previously hadn't really consumed a lot of media, having this little device in their pocket that gave them access to information and video and entertainment. And this giant media ecosystem very rapidly emerged. And we all know, what it looks like today, and it's enormous. And North Base Media, we recognized that while China was first, there would be a lot of other markets that had yet to go through that kind of, parabolic growth curve. We knew, for example, Indonesia, when we started investing, fewer than a third of people in Indonesia had mobile smartphones. So they didn't have access to the internet on their phone. But we knew phone prices were going to go down. We knew data prices were going to go down. We knew most people had never consumed much media beyond radio and TV. And when they got those smartphones and the data prices fell to the level where they could afford to get content, they would, like in China, be consuming all kinds of content in new forms. So Indonesia became a focus. India became a focus. Southeast Asia generally became a focus. Mexico, another place where mobile internet penetration was very low and has risen dramatically. So we thought, if we can find the smartest entrepreneurs who are building interesting companies in these markets, at the time when that growth curve kicks in, we can, ride that wave, and we can help them think about how to produce content. We also have a sort of fundamental belief that each market is going to behave differently because cultural relevance matters enormously in media. And traditionally, there was a kind of imperialist approach to media. If you ran the Wall Street Journal, as I did, and you had newspaper editions in Asia and Europe, those gave you great standing in those markets because people around the world for a long time saw those as the quality publications, and papers locally were never quite as good or as deep as the big US and sometimes the big European brands. What's happened with digital technologies, it's sort of flattened the field. So everybody has visibility into what everybody else is doing. Everybody has the same tools. And so entrepreneurs in Indonesia, in Africa, in the Middle East, they all have access to the same tools and can see what the best products in the world look like, and they can take those and the stuff that seems most relevant to their audience, and they can adapt it for their market. And so all of a sudden, if you're a user, you're going to be much more interested in something that's relevant to you, produced, in your culture, in your language, in your country, that makes sense to you, than you are going to be interested in something that basically looks the same but is aimed at a very different audience. Or maybe people just, people are going to consume content completely differently because they're not conditioned the way they were in the US. In the US, I spent I don't know how many hours in meetings trying to figure out how we put the Washington Post on an iPhone. Nobody in Indonesia who's under the age of 30 is looking at any traditional newspaper on his or her iPhone. They're trying to figure out what's out there and what's the optimum way of, delivering content or information or commerce to me. They're not starting from what was before. They're just looking at what's possible with this device. So it's an incredibly open field, and there's a lot of room for creativity.
So, okay. So, and I agree, what you're doing is very unique in terms of looking at all these different markets, and your portfolio certainly reflects that. So what about in terms of check size? What type of investments are you making? And how long does it take you to close a transaction?
We generally we've invested from, say, 250,000 to $1.5 million in a check size. Usually, earlier stage companies generally will put in less money. We don't generally put a lot of money in purely on the promise of the prospect of something being fantastic.
Why not?
We're a lot more interested in seeing action, and we actually do a kind of two-step investment process a lot of times.
We'll
make one investment.
Do add-ons.
Yeah, and then we'll condition our first investment on the right to take a bigger investment down the line, so we can expand our position if things are going well. We will write bigger checks sometimes. We've gone in as late as Series C when our first fund, or maybe it was even Series D now that I say it out loud. But we went into one company called Minute Media. It was a big, at that time, very big mobile sports operator. Now they do a whole lot of other.
And they're based in London, correct?
They're based in London. They've become quite significant in size. They have something like 300 million people using their products every month. I mean, unique users, which maybe some overlap, but it's a large audience of people using their products. And we came in when they were already running, and they'd already moved from Israel, where they started, to London. And we were brought in, and they wanted us involved because they wanted our help getting into some growth markets in Asia, and we had relationships. So we came in. Again, we generally want to be involved strategically. We're not interested in being passive investors. We recognize that, if we come in early, we can add a lot of value. We have an excellent network of relationships. We know a ton about media. We're very strong in Asia, somewhat strong in Latin America and Europe, very well connected in North America. So we can help people a lot at the beginning. Once they get to, a later stage, in this case with Minute Media, they actually saw some value in us. So we thought, okay, this is something where we can add some value and have a relationship with the leadership of the company. Generally, we'd like to be involved in companies a lot at the beginning. And we recognize that as they get bigger and become more successful, we will have contributed a lot of our value at the beginning, and maybe it's less important for us to be, that involved later on. So we kind of then shift to the next generation.
Now, what's your process in terms of making a decision investing? In other words, company comes to you, they present, and then what goes on internally, behind the scenes? Is it you and your partner that have a discussion, or do you have some advisors? What's that like on the back end for people who are present to you and then they're waiting? I'm assuming, everybody wonders what's happening, what's going on. They're waiting to hear. What's it like on the back end? What's your process?
Our process is, first of all, we're pretty active in looking for companies. We get a lot of inbound because we were the sort of first real media venture investor in a lot of the growth markets where we are active. So people come to us because they know that we're out there. We receive a lot of inbound pitches. What we generally do is, one of our partners, and we have my co-founder, Sasha, who's living in India, our general counsel, who joined as a partner, Stuart Carl, who had been, when I was the editor of the Wall Street Journal, he was my general counsel at the Journal, and then he was the chief operating officer at Reuters News. So Stuart does a lot of B2B technology stuff, and he's also serves as our lawyer. So he's a partner. We have a venture partner in London named Turi Munta, who's a serial entrepreneur and very thoughtful on venture capital. We have a young guy who works with us in San Francisco. So we generally all meet after the first partner has a conversation. If we think it's promising, then we almost always will meet with a company we think has real potential. If we don't think it's going to go anywhere, it's usually one phone call with one partner and thanks very much. If we think it's something likely, we very quickly bring in other partners and try to get all of the partners on the call at the same time, because we generally invest by consensus. We won't invest. If anybody feels strongly that we shouldn't invest, we generally will not invest, because we consider that's an important red flag. We may try to talk that person into a different position, but we're very much interested in everybody being aligned on every investment. So time-wise,
go ahead. I don't want to finish your thought there.
In terms of timing and how long it takes us to go through this process, it could be anywhere from a month to there are companies we've been talking to. I'm thinking of one right now that we're actually thinking finally of investing, and we've been talking to for 3 years. And we've been watching them grow. We've been looking for them to have traction that we can really rely on. We think that, I guess the way we prioritize is the most important thing in our perspective is there has to be a real market opportunity. We have to understand what that opportunity is, and it has to be significant. That's first. Second, the team of people, the founders and people around them, have to be agile and capable of managing a business in that market. They have to persuade us they can do it. And then everything else is details. If those two things are right, then I'm sure there are other factors that we would weigh, like, political interference and whether or not we can repatriate an investment from a certain market. But really, that's where we start.
So, and you had mentioned that you have a lot of inbound inquiries because of your presence in the space. So just for the audience who's listening, for context, why don't you share with us how many investments to date you have so far?
We have about 25, maybe a little more, about 25 investments, 25 discrete companies in which we made investments. Some of them, obviously, we've made more than one investment. And they are in, basically it breaks down, and we have a presence in Southeast Asia. We're in several markets there: Indonesia, Taiwan, Philippines. We're in India. We are in the East. Middle East is a really market from you. The politics makes it treacherous. The lack of media content makes it really interesting, and the opportunity is real large. And then we're very interested in Latin America from a technology point of view, which is media, but not all of our companies are pure media. They can be to support media, make media more engaging, or allow media to monetize. We have investments in Israel, Europe, Japan, India, and the US.
Now, let's talk about, I want to actually talk about some of the investments. So as we have already discussed, you're involved in a lot of different areas. There's one company in particular in Japan, Zaiko, that you fairly recently invested in. And I want to just talk and use that as an example for the audience to understand your process and what goes on. So why don't you share with us, with regards to Zaiko, how you met them? What was that like? How were you introduced to them? And what was the initial interactions with them?
It's an interesting story. I'll make it short. I was in Tokyo. I was with a friend. We met in an unrelated circumstance. We met a couple of people who were, young people doing cool things in Japan. And
where were you? Were you at an event? Were you at a co-working tech?
We were at dinner.
Oh, you were at dinner. Okay.
And I exchanged business cards.
Okay.
And the person I exchanged business cards with, as it happens, was working for a big Japanese company, was an American Japanese, I think American, actually, maybe of some Japanese descent, but left the dinner, and she sent me a note and said, "Hey, I'm actually thinking of leaving, and I'm doing this company. Can we talk?" So we started to talk. My partner, Sasha, was then based in Seoul, in Korea, not far from Japan, relatively speaking. And so Sasha was in Japan, met with her, and we just began talking. And the idea that they had initially, it aligned well with one of our investment theses in technology. I said a minute ago that we're very interested in investing in technologies that allow media companies to monetize in new ways. Because as we all know, traditional advertising revenue flows are diminishing for media companies, even as they've been growing rapidly for Facebook and Google and even Amazon. And so media companies are looking at how else can we monetize? And there's a lot of ways they monetize, obviously through subscriptions. That's become a big thing. but they also monetize. They can monetize through events and organizing events, selling tickets. And the company Zaiko was being set up with an idea, among other things, that it would allow media companies to create a big events business that would allow them not only to host their own events and to sell tickets to those events, but to keep data around what events people in their subscriber base were interested in. So if I know that you like bluegrass music, every time there's a bluegrass band coming to Tokyo, you get a note saying, hey, there's a bluegrass band, and you could buy the tickets. And Zaiko would help the media companies to get that 8 or 10 or 12% affiliate fee from the concert organizers. In the US, where it's a very vertically integrated business, you might have to go to Ticketmaster, which has a relationship with Live Nation. And so it's hard to break into it. But in Japan, it turns out you could be reading an article, click on an article, open a seat map, buy a seat right there, and the media company would get the ticketing fee. Seemed like a really interesting business and very promising. And in fact, they were starting from the beginning. When we started investing in 2019, they were already creating revenue. We actually introduced them to Taiwan, where we have another investment, and they started growing in Taiwan as well. Then COVID hit. When COVID came, we thought it would be a big problem for them because no more events. But they had actually been developing a technology to host live streaming events. And at the beginning, it was kind of rudimentary. A lot of theater companies in Japan, desperate for revenue, started having, they started just basically putting up videos of their old performances, or even doing live performances with members of a theater troupe. Book authors started doing book readings and charging 500 yen, which is like $5, to watch them do a book reading. And Zaiko, which was supposed to do a few $1 million in ticket sales in its first year, did north of 50 million in its first year because of COVID. And they're now on track to double that. And for this year, it's growing very fast. And as you know, live streaming entertainment, which is a place where we're now, because of that experience and because we have an investment in another company called Kiswe, Kiswe. Kiswe is a live streaming events and video technology platform. Kiswe did a concert for the South Korean boy band where their technology was used to have sort of synchronous live performance, really interesting experience. They had something like, I think, 350,000 people buy tickets to the event. And at that point, you realize we may go back to concerts in stadiums, but if you're running performers, you're never going to just do a concert in a stadium when you could also sell another 100,000 tickets to people who aren't present. But there's a bunch of interesting challenges around it. Like, are we going to end up with, there's been some experimentation around concerts that are in virtual space where, you can go into some kind of a game environment and you can actually watch a concert or maybe interact with people who are performing, which is going to create a whole new kind of dynamic around how do you create the content, the live content? How do you create live content that actually works in a virtual world? How do you create live content, live streaming content that's entertaining and the audio quality is good enough? How do you make it possible for the performers to interact with the audience members so that when a performer is, doing a concert, they can feel the audience? If you want to look it up, there's a great piece on the Wall Street Journal and WSJ.com on live streaming K-pop concerts in Korea, which actually features Kiswe, one of our other companies. And you should watch it because it gives you a glimpse of the future.
So with regards to Zaiko, how challenging was it to get that transaction done, considering, they're based in another country? Is that ever really an issue? Does it take longer than if it's in the US? What kind of challenges did you have with that?
Venture capital has gone global, fortunately, before I got there. So a lot of these issues have been ironed out. There's some markets where companies have to basically set up a Delaware company if they want to attract venture capital because their national market is too complicated. There's currency risk that you have to worry about in some markets. Well, in a lot of markets, it's something you have to be aware of, that you could, your company could be doing fantastic in their local currency, but their currency could be plunging and you could actually be losing money. You have to worry about sort of legal jurisdictional questions, like if there's a dispute or certain things may not be allowed, or is there withholding tax from the country where you're operating, so that, if the company pays out either a dividend or decides that you want to sell, there's some giant withholding tax against you. So there are complexities around it, but it turns out Yes, I say it's been navigated before. And so, people are out there. The pathways have been largely cut through the woods already. And if you follow the pathways, I think you can be okay. But it's not super straightforward in all.
Did you have any challenges in getting that transaction completed?
In Zaiko, not really. I mean, we went back and forth. The law firms in Japan. Japan's
when you say back and forth, give us an idea of what the back and forth was over. Was it over terms? Was it?
It's sometimes over terms like language terms and terms of law. Sometimes those things arise. Sometimes it's over custom. People expect certain treatment, and if they don't get it, they don't behave the same in every market. I would just say, what we've seen and we learn, like at this point, India, for example, where we have several investments, the Modi government has, over the last couple of years, sort of arbitrarily imposed new rules. They did a retroactive tax on e-commerce companies, including Amazon and Walmart, which owns a big Indian e-commerce company. They announced that there would be a 26% cap on foreign ownership of digital media. When we started investing, there was no such cap. As it happens, we were aware that there was a cap on foreign ownership of traditional media, so we just assumed that might be coming. But that has a big impact. Like if you're a foreign investor, if foreign investors own 25% of a company, and the government imposes a 26% cap on foreign ownership, that no other foreign investors can come in, and that limits you in terms of like what your exit potential is, and it gives the other Indian investors leverage over you when there's a transaction, because they may be trying to get you out. There's a whole lot of issues investing internationally that don't apply in the US. And I think founders, I know your listeners include founders. One of the things founders need to be mindful of, if they're founders in those countries, is they need to be mindful of like, what does it take to get a foreign investor interested in their company, and then also make them comfortable about investing. So you may have to, if you're an Indian company, you might want to actually be based in Singapore from a legal point of view, because it's the jurisdiction is better and better known. If you're in some countries in the world, you might want to actually have a Delaware company. There are venture capital companies in the US who are open to investing out in companies that operate outside the US only if they have a Delaware entity.
Now, you touch upon something I thought was interesting. Obviously, as we've already discussed, you're in different markets and you're involved with companies that are appealing, especially because it's media, different cultures. Now, it's not for every venture capital firm to make investments into countries where maybe culturally they're not a fit. What is it about North Base? It seems that you're chameleon, able to kind of blend in with whatever the culture is. Why don't you talk to us about that? Because I think that's not for every firm. And I think that, you have to be very dialed into the culture, especially if you're communicating with them across media. Why don't you touch upon that for a moment?
Yeah, it's a good point. I wouldn't describe us as chameleons. I would say more that we're interested in what everybody is doing. We want to understand it. We may not be of the culture, but I think if we can understand why something works, we don't want to invest in places where we don't understand what's going on. I just would be very clear. Like if we don't understand the market at all, we're not going to put our money there or put our investors' money there. We're in places where we've generally had experience working. I spent enough time I lived in China, lived in Hong Kong, lived in Japan. I covered Southeast Asia and South Asia for years. My partners lived in Singapore, Seoul, and Shanghai and Mumbai. We've done business in Latin America. My partner's European. He lived in Europe. We have another partner in London who's European. And that partner in London speaks Arabic and knows Middle East. So we're in places where we feel like we have relationships. And in fact, we're kind of at the point now, because we've been around for enough time, that we're starting to make multiple investments in markets where we think there's going to be a lot of growth potential. And so that's an advantage for us. We try to find people I would say we're disadvantaged in the sense that there will be probably incredibly successful companies coming up in markets that we would like to be in, where we don't speak the language, where the founder maybe doesn't speak great English, but is no less brilliant for not speaking English and maybe enormously successful. And so I have no doubt that in Indonesia, possibly in India, possibly in the Middle East, in Mexico, there will be companies that we may not connect with because we don't have the same cultural attributes that they do. But in those markets where we also think there's huge opportunity, we look for people where we can find those common elements and work with them.
Now you're seeing, again, opportunities from all different cultures. So what advice would you like to share with tech company founders to help them with their presentations for capital?
So it's a good question, because I think that there's a lot of people, and this is not unique to venture capital or founders or anybody else, people tend to see everything from their point of view and not from the point of view of the person they're talking to. And so it makes it a very relevant question, because when you're pitching somebody for money, you want to sort of understand what they care about. And probably the most important thing is, I go back to what I was saying in terms of our investment criteria, is like the market opportunity. It has to be intuitive to the potential investor what the opportunity is. And it can't be a case of like exaggerated statistics, like, the total addressable market for this is $1 trillion.
Let's talk about that. How impressed are you by market share?
I'm impressed by real traction and growth.
Right.
And I can understand, any concept you can describe to me, but I will understand if it's real or not real, because, I bring my own frame of reference. But I think investors want to know that there's a significant market and that you can scale in that market,
right,
and that you have the potential to scale in that market.
But you never buy in.
It's like an infinite market and, it's $1 trillion. I mean, they're really.
But you never buy into the, if we only get 0.1%,
I lived in China. Dude, that's how people have been selling the China story since the 1920s. If they would just add an inch to their shirts, and that was in the days when people were selling cotton to China as opposed to shirts coming out of China. So yeah, the competitive universe that you're in is another thing, because most investors are not super expert in any one specific. If you have a really disruptive and original idea, the chances are your investor is not going to be totally expert in your area. They may get it immediately and say, oh, I understand why that's valuable. But then they're going to want to so what's the competitive universe? And not just who's already doing what you're doing, but who could sidle into your space because it's adjacent to theirs and just sort of knock you over. And in particular, in my world, I'm always worried about Google and Facebook, because, Facebook is a sort of, odious troglodyte that comes and destroys everything in its path. And they're heedless of anybody else's interest. And so I'm very interested to know whether you're platform dependent, because if they decide to come in, they'll destroy you. So, and then I guess the final thing on that front of what you want to tell people at the beginning is like, how are you going to change things? Because most investors are not looking for one more thing. It's a giant market. There's other people out here. I'm smart and I'm going to figure it out. They're going to want to hear that you're changing things and there's some change that's real and they can grasp. So those are sort of the things I would say in terms of presenting to VCs. But let me add one other point, which is I would also be really wary of VCs. When you're talking to venture capitalists, don't be so hungry for money that you take terms that you'll regret, because it makes it very hard for other VCs to come in later. And this is something that I'm seeing more and more. The venture capitalists in the US in particular, but not limited to the US. There's a lot of venture capitalists that have been burned along the way by this founder or by that other investor. And so they attach like a whole raft of conditions to protect themselves. And they have liquidation preferences and all kinds of special rights. And then later, when, even if your company is doing well and you're trying to raise money, somebody else comes along and says, well, hang on. If I come in, I have to build in a whole bunch of conditions of my own to trump the person who came before me. So to the extent possible, if you're a founder, try to avoid special conditions especially at early stages, from venture capitalists.
I think that's a very, very good point to make, and I've yet really to hear that. We've heard a lot of other things, but not that in particular. I think that's great advice. So let me ask you, with regards to North Base investing and with co-investing, are you excited to co-invest alongside others? Do you take investments in along the way? Talk to us about that, how you're structured with regards to bringing in additional capital and also with co-investments.
So one of the mistakes we made in our first fund is we didn't reserve enough for follow-on, which meant that when our companies became successful, we had to farm out the follow-on to our investor pool. And then if they didn't want to take it up to other people, if we wanted to try to bring them in, which got us in the habit of sort of looking for other investors. And we actually like investing with other investors. We have a few investors we invest alongside particularly in Asia.
You've had more than one instance where you've joined the same investor.
Yeah.
When investing. Okay.
Yeah. And because, there's people that, you get to know them. And I would say in almost every case, they're smarter than we are. Like they come in and make us feel good. So we're always looking for co-investors, people who want to participate alongside us. We offer our first priority is obviously offering co-investment rights to opportunities to our existing LPs, but we are always looking for other investors who are interested in the space that we're in, because we see deals like right now, we're looking at raising money for a very successful company of ours in Asia. It's far more money they're raising than we need. We could ask them to give a bigger allocation. So if we could sort of shape the other investors coming in so we know who we're investing in, that's better for us.
Now, with regards to what you just mentioned, you said that you reserve some money for add-on investments, but yet you were just talking about raising capital for a different project. So how is that? Do you have money allocated for a certain amount of projects and then you have other circumstances where you're raising another fund? Just for some clarity on that.
Sorry, the question is, are we holding aside money?
So you said that you do add-on investments, which means that you have to have capital reserved, correct? To be able to add on, right? But then you're talking about making other investments and bringing in other investment. So how are you structured? Are you, a non-discretionary fund where you raise, $100 million and you're putting money out, but then you're fundraising for another fund? Just for some context, how would you describe how you're set up?
We do one early stage fund at a time. The early stage funds have been our main vehicles. They're not big, $20 million. We're probably going to launch our third fund later this year. Second fund is closed and doing great. We also then do SPVs where we see projects along the way where we might put money into a specific project. It might not be an early stage company. We go to our LPs in our funds and say, do you want to participate? So we're in a very interesting Latin America and movie, television, podcast production company that we know well, which is the SPV. I'm on the board of, and we're big investors, on the cap table investors of a public media company in Poland that does business media. So we look at other projects along the way, and we will continue to look at them. I would say 80% of our time is on the fund,
right?
But we look at other things.
So if you see something exciting, you're just figuring out another way. How do we get this deal done? It may not fit within what we already have structured, but we're going to find another way to do this because we like it.
Exactly.
Yeah. Okay. Terrific. All right. Well, so for people who are interested in maybe learning more and investing or co-investing, or for a tech founder that has a project that would be of interest to you, how do they get a hold of you? What's the best way?
Easy. Marcus, Marcus at northbasemedia.com. And happy to hear from anybody. Terrific.
Well, thank you so much for sharing your time and your experience today. And we wish you and everyone at North Base Media the best in all the projects that you're involved in. That's it for today's interview. And if you're a VC firm or a tech company founder and you'd like to share your interesting story, then please visit us at auraco.com, where you may learn more about Aura's PR marketing services and complete the podcast application to appear on the show. Thanks again, Marcus, for joining us. And, hopefully we'll hear back from you on some of your future investments.
Thank you, Keith. I look forward to it. And let's meet in person once we finish it.
Absolutely. Thanks again.
Take care.
Thank you for joining us on this episode of Funding and Disrupting. Don't forget to visit our sponsor, Auraco.com, to learn more about working directly with Aura Collective's exclusive technology PR team. They'll help you craft your message, get noticed in the press, and help you get your venture to the funding finish line. Again, you can visit them at www.auraco.com. Keep funding and keep disrupting.